If you like our podcast, we think you'll love our Next Economy MBA. It's a 9-month learning journey for entrepreneurs, intrapreneurs, and aspiring change makers alike. Our MBA gives emerging leaders a new set of blueprints for creating life-serving, regenerative organizations. We explore topics like regenerative finance, cooperative models of ownership, alternative economics, and much more. You'll leave inspired by the stories of leading Next Economy organizations, and you'll be nourished by a community of mission-aligned peers. So we invite you to join our flourishing community of more than 275 alumni and growing. Visit lifteconomy.com/MBA to learn more. That's lifteconomy.com/MBA to learn more. Cohort 7, our newest cohort, begins on September 21st, 2021. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
I'm Kevin Bayuk, a partner and worker owner at Lift Economy. My guest today is Mark Watson. Mark has over 30 years of experience in finance and has been at the forefront as a leader in the emerging impact investing space. He started his career as a banker at the First National Bank of Chicago, now JP Morgan, in commercial banking, corporate, and public finance, and then subsequently joined the investment team and had a 20-year career, including managing investment portfolios for foundations, endowments, and institutional pension funds. More recently, Mark worked at the Boston Impact Initiative, where he built a national reputation for its innovative work marrying financial rigor with a social impact mission supporting entrepreneurs of color in Eastern Massachusetts. Mark is also the founder of Keel Asset Management, LLC, a financial advisory firm that provides socially responsible financial planning and investment advisory services to nonprofits and public and corporate pension plans. He is an advisory board member of MIT Health Innovation Systems, Inc., board member of Institute of Educational Leadership, and board president of Sustainable Cape. Mark serves as the senior investment strategist for Fair Food Network and has been on the investment committee for a long time. And he has recently founded Potlicker Capital, a BIPOC regenerative farming fund, which I hope he can tell us more about today. It is decidedly rare in our experience at Lift Economy to meet someone with such a deep understanding of the nuances and needs regarding finance, all the way from the norms of Wall Street with its hedge funds to the needs of farmers and their regenerative farms and fields with their hedgerows. Mark, welcome to the podcast.
Thank you, Kevin. A pleasure to be able to share my learnings with your audience.
Wonderful. I'm wondering if you could maybe even start and just tell us a little bit about your background and or how you first got into the work you're doing today, or just how you arrived at the work you're doing today.
Yeah, sure. I like to think of my career as a journey that many of us are actually on. And that journey is really the evolution of understanding the interconnectivity of money and power and knowledge and politics. And I think our bias is to sort of reduce things into boxes that we can understand and to measure. And unfortunately, it leads to unintended consequences. And those consequences we're living with today. So if I can sort of roll back to the beginning, I had never planned to be in business. It was the only way I could get a job to pay for my student loans. And little did I know, my first role was to work in treasury at a large money center bank in the 80s, actually directly for the treasurer. And so I had a chance as a young person to sit at the foot of a trading room and at the same time figure out how that bank was managing its resources, trading bonds and notes and offering loans at the same time and making sure that the bank was solvent. And what a great opportunity, particularly for an African-American young man, to sit and sort of have a bird's eye view at that stage in my career. That was not lost on me. Just sort of to look at it from a systemic standpoint first, and then learn how to do analysis of transactions. So after that experience, I had a chance to go through credit training and public finance offerings and worked in M&A in New York for the same bank, actually, to do analysis and LBO transactions, and decided that I was really more interested in investing, not transactions. So I elected to learn how to pick stocks. And I'll be honest with you, it never dawned on me that there was a different way other than following Merton Miller's, I went to University of Chicago Business School, approach and view of the world, which was, risk was defined by volatility of securities, not climate impact or community impact. Those were never part of the equation. So the first sector I had to provide analysis and recommendations for a trust department's clients were food stocks, the food sector. And that was actually during the period, the 80s was a period where there was a lot of leverage, financial engineering for some of the nation's largest food companies, Kraft and Philip Morris, just by RJ, buyouts all over the place. And it was a very transactional moment. It did provide tremendous wealth for very few people in this society. And I had the opportunity to start a African-American owned investment firm with an African-American woman in 1990. And that really was the first catalyst that allowed me to have a connection between capital provisioning and investments and social justice, not from a community standpoint, but just from a racial standpoint of just allowing other players who normally are not part of the allocation of capital to be part of that. There had been less than 20 Black-owned investment managers in the country. There still is a very limited amount. But I got to be part of the vanguard of what tomorrow might look like. Fast forwarding, I worked as part of a 4-person team to manage $5 billion for a large British-based insurance company. And it was traditional investing. I covered food, but a quarter of the other S&P sectors. And that was exciting. I got to travel to New Zealand and Australia, but I will tell you, I spent my time on those trips when I wasn't in board meetings trying to understand indigenous cultures. That's what I did when I had free time. And it still had not occurred to me the interconnectivity between what I was doing during the day and my interest and passion around social justice. Still disconnected. I then was asked to join a fast-growing Wall Street firm that was an investment firm that grew amazingly from 5 billion of assets to 15 billion in just 5 years. And I was the most senior African-American person at the firm, in fact, the only professional at that juncture who was on the investing side. And it gave me purview, just like I mentioned I had when I was in my 20s sitting at the trading room, the tremendous amount of wealth that existed. I'm from a middle-class background, but had never really experienced a world where people were buying $8,000 bottles of wine and lunches at the pool room and private planes. And it was astounding how much wealth moved and how few communities of color were represented or even mentioned. And certainly climate was, the chemical industry was a celebrated industry, right? Monsanto, it was not a sector that was viewed with suspicion in terms of long-term impacts. So I made a decision in my late 30s to spend the rest of my life to redirect resources to those parts of the world and certainly my own community that did not have access, that did not have political or academic access or financial access to reinvest in their own communities. And that led me to starting my own advisory firm, Keel Asset Management, which was really launched because of a social justice nonprofit in Chicago that advocates on behalf of communities across the city who wanted to align their values with the corpus of the money that a family office had gifted them. And so I designed an investment strategy for that. And that really is the genesis of the work that I do now, which is creating designs that integrate community voice, integrate knowledge capital, which is equally important, particularly for communities of color, political capital and financial capital, so that parts of the community that are disinvested are bathed in the same resources, but with a different end goal as the rest of society. And that has manifested in a way where I've been involved on boards and investment committees that are on this journey along with me in this quest of integration and of resources. So Boston Impact Initiative, which was actually started by Deborah Fries, asked me to join the investment committee in 2017, to join an experiment that they had in Boston, which was what happens to wealth opportunity if you directly or intentionally make investments to Black and brown entrepreneurs who provide ownership opportunities, not just wage opportunities, but ownership opportunities in their business models, and also had a sensitivity to the intersection of climate and racial and financial sustainability goals. What happens if that's the three lenses that you make investments? And what happens if you use integrated capital using grants, debt, and equity and near equity investments in these enterprises, and you do it at non-extractive prices? So what does that mean? That means that the intention is to support the success of the enterprise and not to extract, quote, market rate returns on behalf of your shareholders. The entity itself was a charitable loan fund. So it was a way to disaggregate the power or the influence of the investor from the recipient or the entrepreneur. A beautiful experiment that has blossomed, and I get the chance together with BI to still share this knowledge with 12 other cities, and that's still ongoing now. 12 other cities who have entrepreneurs who are doing the same project, same interest. That has been a great success. I'm very proud of that work. The second most recent opportunity I've had was to join Fair Food Network, which I had served on the Fair Food Investment Committee for a fund that they started back in 2013, around the same time the BII started, again, using integrated capital. And it was to make investments really in entrepreneurs within the food sector that could help stabilize small farms initially, not in the farms themselves, but in the intermediate business models that would buy from farms. And so that ranged from catering companies to dairy product aggregators in New York State. Very interesting project. My decision to serve in the role of managing director of the fund was really to help catalyze a redesign of the initial effort to think about how could philanthropic and recoverable grants and below market debt that was very flexible help shift our food systems to be more local, produce more healthy food, and to be more equitable in the way we make available the means of production to communities of color. And so the consequences of that has been a shift to a deployment model of 50% of the transactions that we invest in are to BIPOC entrepreneurs. They go from the producer to the retailer or to the restaurant, and we are investing in clusters in recognition that place-based investment means an opportunity to create communities of practice amongst the entrepreneurs who can share knowledge and support each other. And so we are doing that in Michigan through the Michigan Good Food Fund, which is right now undergoing a redesign to incorporate this sense of community building and cluster building and knowledge sharing and financial resource distribution for entrepreneurs so that you have businesses that not only start, but survive and thrive. And that means follow-on lending, follow-on investment of knowledge and access politically. That's also happening in Camden, New Jersey, a city that has been among the poorest of cities in this country for decades, where through the support of a corporate partner, we are instigating, again, a collaboration among a variety of stakeholders, including the community, to, again, offer integrated capital to entrepreneurs who live in Camden. There's been significant investment in Camden, but it's been at the institutional level and not at a level where it's actually creating wealth for Camden residents. So we again want to invest in food entrepreneurs, using that as a sector to create economic development, and have those who live in Camden for generations have the opportunity to own and start businesses and grow businesses and direct what type of food comes into the community. There's been many unsuccessful attempts for large big box grocery stores to survive, and they don't in Camden. So it has made it challenging for that community to have access to healthy food and the type of food that's culturally relevant to them. So we're instigating this mechanism of CDFIs and academic institutions and blended capital funds to create what we're doing in Michigan as well. So that's sort of a long-winded story, but it weaves together how I arrived at this point. And I think there's a host of other, what I call retread financial professionals who have a lot to offer if you can join their assets with activists and you work together and not look with suspicion at each other's tool sets, but actually blend these and look at social justice and food justice and climate justice on a more holistic, systemic level, and realize we need all of our tools to accomplish these objectives.
There's so much, Mark, in your experience that I want to ask you about for the listeners. There even maybe semantic definitions that could be really helpful. I'll name a couple of them, but I also want to maybe go to also hear about the genesis of the new venture as well. And then we could circle back to some of these themes. I really loved you sharing about the systemic view that you kind of emerged into, and how that systems view and the interconnectedness and connecting these things, different aspects, has been an important part of the journey. You mentioned a few things that I think a lot of our listeners will be curious about. How to integrate the community voice into the allocation of capital is a question I'm sure will come up. Another, when we talk about integrated capital and blending of philanthropic resources, grant capital, lending, near equity, equity-like type investments, so different asset classes and different kind of pools of capital. What are some of the different roles? Is it credit enhancement? Is it technical assistance? What are the different aspects to the integration? We can get to that in a minute as well. And when we talk about this, I think imperative to actually do repair and for a more socially just economy, that we actually have to move away from this notion of market rate returns. There's a big question, I think is interesting to a lot of Next Economy Now listeners is, what do returns look like in a world when it's actually working, when it is just? And I know there's not no number to name, but it'd be fun to talk through that of I think the recalibration, because like you said, we've ignored the real risks to society and also now the planet with our climate and biodiversity emergencies. And so the risk and return kind of paradigm is ripe for a real transformation in thinking, and you've been on the forefront of that. But I'm curious, before we go into some of those topics, I'm curious if you could share about Potlicker and what's next for you, or amongst all the other things that you're working on. Is that okay?
Yeah, sure. And I think I can answer those questions because Potlicker, which is supporting charitable loan fund to Jubilee Justice, which Conda Mason founded, and Conda and I both co-founded Potlicker Capital, was really the next iteration of, I think, where the impact investment world and the activist world need to meet to solve systemic issues. Again, we've all been working our silos, and it has resulted in reductionist approaches, which have unintended or negative consequences to the communities we're actually trying to support. So Potlicker Capital is our effort to build a new institution that has justice, climate and racial justice, and food justice at the center of its beginning. Not as an add-on, not a DEI committee, not an initiative, but a new institution. And the new institution is needed because the system is a recognition that the system in which BIPOC farmers, in this case, we're talking primarily about Black and Brown and Native and all First People farmers have been not only not supported, but thwarted by the very same entities historically that are supporting white farmers and large farmers. And so to expect a different outcome from the same actors who are entrenched in behaviors and patterns of capital deployment and knowledge that actually create a problem is unreasonable. So we want to talk about Next Economy. So Cotton and I were thinking, well, how do we deliver blended capital in a way that the community actually informs its distribution? Not Mark Watson, not Condon Mason, but the community has its own resident knowledge around the type of support that they need in order not only to repair the damage to the communities, but to thrive. So what does that look like? That looks like a charitable loan fund. I mentioned that earlier in this podcast that offers debt and near equity, can offer equity, offers guarantee products, offers cooperative formation, TA, offers communities of practice and ways to interconnect, offers advocacy in terms of access to both government, federal dollars that are supporting other parts of the farming and ag community, but gives voice to a group of people who have been subjugated for decades. And in addition to the repair objective, we also want to move this group of farmers from what we often say the back of the bus to be the vanguard around climate-friendly agricultural or regenerative farming practices for the nation. So it's a big goal, but that's what we want to do. And so we formed Potlicker. And for those of you who are not from the South, our primary geography is the South, Southeast, and the West Coast, including Hawaii, is really to offer farmers, again, investing in clusters in these markets, the opportunity to build their own capacity, but also the demand side. So, often loans that the impact investing world may offer to entrepreneurs, including farming entrepreneurs, don't change the demand dynamics that have come about because of racism and over consolidation of the food sector. So we are at the same time developing demand aggregation models with large CPG companies, distributors who have an interest in social justice and climate justice, who are willing to buy from our farmers. And the reason why that's important is it's an attempt, again, to look at the systemic changes needed. So from a financial standpoint, sort of traditional world, deal discovery, finding the farmers who have the intentions to protect the planet, but also have the capacity to deliver quality, non-GMO, non-chemical infested food products, and to help the buyers actually fund the supply chain that they want to see. Otherwise, all of the goodies go to the same actors, the large industrialized farmers, who will get all the benefits, but they're the ones who help create the problems. So we want more decentralized farming that increases resiliency in our communities, particularly BIPOC communities, where there's connection with the buyers as well as the sellers, and have an opportunity to manage all of that through two entities, Jubilee Justice, which provides the technical assistance to do this work, and Potlicker Capital, which provides the capital to do it. So let me just answer the other questions that you mentioned. How do we do this? Our board is farmer-led, 9 seats, majority farmers. Our investment committee is farmer-led, majority. Certainly we have financial people in there, but the way that the money needs to come, the terms that the money needs to be distributed, needs to be informed by local communities. And that will look different for a farmer in Hawaii than it does in Mississippi. So we want that knowledge that we cannot all hold ourselves on the committee or on the board. The other ways that we do that is that we are raising capital that we define as reparative capital. And reparative capital is an acknowledgement to your point earlier, Kevin, around market rate versus non, that the debt to these farmers is actually on society. It doesn't belong on their balance sheets. So what does that look like? That looks like guarantee funds. Now, Black farmers have to collateralize 3 times often the value of the loan if they get the loan on time at the right time during the farm season. So one of the things we want to offer is we will guarantee loans for other intermediaries to offer terms in a just way to these same farmers so that their livelihoods are not at risk every year each time they seek capital. It also looks like grant capital. So the conversion from traditional farming methods and commodity markets to niche markets and organic product. And Jubilee Justice is leading with rice, but we focus on all types of products, ag products. There needs to be some risk shifting. So why should the most vulnerable farmers in our nation be responsible for carrying all the risk of weather, climate, politics, financial risk? Why should they carry all those risks alone, even though they're trying to demonstrate the way that we should be moving forward as a society? So we're willing to provide crop insurance. We will provide grant capital to bring in other farm TA, technical assistance providers like Cornell University is foremost in terms of SRI rice, which allows you to use substantially less water, non-GMO, et cetera. But we will pay for all of that to these farmers as long as they agree to share that in these communities of practice in their community. So our hope is that in Mississippi and in South Carolina and in Hawaii and in California, that we will have clusters of farmers who are together putting forth these different farming techniques, and we'll provide them with some risk shifting from the supply side, like low rate or zero rate loans, grants, collateral, and on the demand side, offer them contracts so they know they are selling into markets that already exist. So what a wonderful idea. So lots of complexity, but this is a big problem that has resulted in almost the extinction of Black farmers from over 1 million to less than 45,000, and that's including the urban farmers. And the average farmer is in their 70s. So if we don't fix this now, this will be a different problem for the next generation. That's the goal of Potlicker. It's super exciting because it's also an opportunity to advocate for at the USDA for the plight of BIPOC farmers in different ways that the ecosystem should show up for them. And we're part of those efforts too.
It seems like there is a lot of moving parts or potential complexity, but I return to your point earlier that a systemic approach is required because of the enormity of the harm done and perpetuated for so long. I also like the connection to the notion of potlicker itself, right? My understanding from boiling collard greens and ham is that you're utilizing all the tools in the toolbox, if you will, and utilizing all the nutrition from the primary production to create a nutritious broth that solves for nutrition. In this case, leveraging the knowledge from the community, blended types of capital, integrating capital from various asset classes, and also the market development piece and connecting demand aggregation, also leveraging technical support for, I heard you say, maybe cooperation or cooperative formation where some maybe cost sharing could be accomplished to increase the potential margins to provide for livelihoods and sharing the benefits across cooperative organizations. And then looking at also the federal and state systems that are in existence to ostensibly try and solve for some of this, but not adequately or holistically. So it's the whole system. It's everything in the pot. And I love that connection of what you're putting together. I'm sure that's both very challenging, but necessary. And to one of your points earlier is there certainly is a societal largesse that has developed from the exploitation of these populations of individuals and from the land. And that largesse in this case, to be leveraged or utilized through this type of charitable loan fund with all of its ecosystemic characteristics is, I believe, the future of finance in a climate chaotic world. So in some ways, Potlicker might be the vanguard of what might be. It's not, as we know, it's not just food. It's in sheltering. It's in all aspects of human settlement where this is a need. And I'm very excited to see Potlicker develop. I have a specific question in here. It would be, I know it's new or newish. Can you tell us, and if it's confidential, it's fine, but if you could tell us like what stage Potlicker is at or what some of the next steps are, that'd be really helpful, I think, for our listeners.
Sure. Thanks for the inquiry. We have assembled our board, our investment committee. We will be more public on the conference circuit the fourth quarter. We have actually already closed our first loan with a African-American, Louisiana-based farmer who uses pigs to break up the soil and grows rice and non-GMO vegetables. And it's a whole little mini system as a demonstration model of how this could work with small acreage. And the average Black farmer has just 100 acres compared to the 500 acres that you need to be economically sustainable using traditional farming methods. So we're trying to show that this is not just a pipe dream. We will be actively soliciting investment dollars through note sales by the end of this year. We are soliciting grant dollars. We have a fiscal sponsor currently until we receive our letter of determination. Common Futures, formerly Bali, is that entity. And so we can receive grant dollars immediately. Those grant dollars can be used to pay for the administrative costs of deploying this capital. Our goal is to work with 300 farms, and that can include livestock over a period of time. And I imagine this is somewhere between 5 to 10 years to do this. But it will be establishing relationships so that we would be there for follow-on investment and coordinating other lending groups to behave more responsibly to these farmers. So this is a relationship we want to form not just with the farmers, but with other intermediaries so that we retrain how these farmers are viewed. We have a stellar team of experienced people who have run different parts of what's necessary to manage this complexity, whether underwriting, and they are farmers themselves who understand that, or insurance providers. In fact, one of the only African-American insurance providers in the country, crop insurance, to do education around what's available. We've assembled. We have technology people so that we can create and maintain these communities of practice, and a board that is stellar in terms of deep knowledge in regenerative farming, mediation between communities, philanthropic access, et cetera. So I'm very excited to use this. And I want to give proper credit that what we're all doing is just reconstructing what our forefathers did in the beginning. Before we had huge industrialized complexes where we had this reductionist thinking. The idea of feeding a community and thinking about the health and welfare from a variety of aspects is not a new idea. I mean, the native communities were doing this before most of us arrived. So we're just reconstructing a holistic approach to care and feeding of community. And we're using Potlicker and Jubilee as a way to demonstrate how other institutions, again, we're talking about systemic, other institutions should be showing up or could show up and trying to address societal problems. So I just wanted to share that.
So important. And it's, again, indicative of the large, long-tail trend of the recalibration of capital, the risk-reward paradigm. I'm curious for some of your thoughts on this. You mentioned earlier risk in the way that the financial world evaluates it is all about volatility of the securities and the just financial risk and the risks of the climate and biodiversity crisis actually existential to humanity, never was factored in, still isn't today into return expectations at all. And of course, the risks to a just society, a vision for a just society, which I think most people would say, yes, I'd like to see a more just society. Well, we know we have a situation of stolen bodies and stolen land and centuries of exploitation. And to expect that all we have to look at is financial risk in order to arrive at a return profile is, I think, an antiquated notion, and it's something that we're evolving out of. And Julie, again, is at the forefront here. I'm wondering if you have any thoughts on, is there a great recalibration of capital that's coming or necessary in terms of return expectations, or do we have a long haul there? What are your thoughts on how that's playing out?
I think it's possible. I'm not saying it's happening, but it's possible. And the reason, one of the points that I like to raise is, without getting too wonky, the capital asset pricing model, which is what prices risk for most traditional capitalists, was an idea of a European American man in the 30s. This was a theory of someone who decided this is the way that we all should view risk. And to hold that as the holy grail, as a way to measure risk going forward, is an extension and extrapolation of colonialism. Hence, we end up at a period in this country with the largest wealth gaps that we've ever seen and really unstable social fabric as a consequence. So clearly, using what we all have been taught as a well-defined way to measure risk was missing a lot of the pieces. Now, I'm not advocating communism, socialism. I'm not saying that. I'm just saying that clearly the models that we have been using don't measure all the risks associated with an investment. So that's one point. The second point is investment is not just cash. Cash represents knowledge and time and effort and culture. It's just a means to store and trade those things. So it's a fiat currency. So it represents all of our intentions and history and ancestors and all of that. So to allow that, to use that symbol to fix a multivariate problem, which is community, doesn't make sense to me. So I'm hoping that particularly the investment community can become more rigorous around finding ways to measure community health. I mean, we talk about the social determinants of health, but I mean, that's the beginning of that discussion, is a way for us to recouple money, or at least reprioritize money in the way to solve things and to measure the returns. So we're trying to do that, returns around leadership, growth, knowledge transfer, sustainability of farms, regeneration of eroded farmland, inclusivity around gender and farming. I mean, there are all sorts of ways to measure the health of a dollar invested in a Potlicker note, beyond whether you get your money back, beyond that. And that will take decades. I'm sure it'll be many decades, but we are at least realizing that the capital asset pricing model somehow was missing a lot of the risks that we thought we were capturing.
Mm-hmm. Well put. And even if it does take decades, there's so much that can happen so quickly by having these leading models like Potlicker in terms of repair. And some of the recalibration, I think, will happen once we look at those 300 farmers thriving in community together and the land being cared for in a way that is more resilient than the land around it, with the imminent climate catastrophes that we know will be coming. And so the value of resilience will help us along our way in this great recalibration. Mark, I'm so grateful for everything that you've been working on and that you're working on now, the courage to see what you're seeing and then to endeavor to put what is complicated or difficult. Certainly you could have chosen at any number of points, easier pathways, for example, to maximize personal wealth, or any of the off-ramps that so many other people might have chosen, and you've held to seeing the systemic view. And I'm just humbled and grateful for all the attention that you're bringing to the work that you're doing. It's very important for all of us and for the next economy. I'm wondering if there's anything you want to share that's bringing you alive or exciting you, as maybe a final question for the interview. What are you watching or tracking that's really got you excited in this work?
I'd say sort of going to 50,000 feet, things happen in cycles, but what is different is there have never been this many people on this planet. So a lot of the issues we're seeing, the crises around social integration, climate issues, health issues, I see as the confluence of how do we learn to work together globally on a planet that's going from 7 to 9 billion people. And these are issues that societies and none of us have had to deal with. And so while it's daunting, it's also exciting because we get to create new systems that actually measure interconnectivity and account for interactions and move away from provincialism, which is artificial by definition. It's not possible to live on an island anymore. And even if you do, you still need to import your food, unfortunately. So I am excited about that because I think it's the true nature. I just happened to watch this video around mushrooms and how those systems work, which is a natural system. And I think that's a great metaphor for what we're being forced to realize in many different ways across the globe, is that we are connected and that there are interactions. So I'm excited about that. And it will change the way finance works, politics work, climate efforts work. And I'm looking forward to the next generation carrying this work forward.
Well, Mark, again, I'm so honored to speak with you today. And I'm sure there's more we could talk about. So maybe we'll reconnect again after the official, more public launch of Potlicker. So grateful for all your observations and all your work. And I look forward to keeping you in touch with the Next Economy Now listeners.
Great. Thank you very much for this opportunity. And I wish your listeners well.
Thanks, Mark.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.